Hi friends, it's Shavana with EXP Realty, and I wanted to share with you about 3 topics today. Number 1, why are the US banks failing? 2, let's talk about inflation, and 3, let's talk about interest rates. You probably want to know, why are the US banks failing? And I think the biggest reason for that is that the reserve requirement that the banks need to have on hand, i.e. the amount of cash they need to have on hand, went from a certain threshold and a target at the beginning of 2020 down to 0. Now, why did they do that? They did that primarily because the demand for loans on the US banks dramatically dropped because a lot of businesses weren't having the same amount of activity because there was less demand from us as we were all in lockdown. So what did the banks do? Now that they didn't have loans, they had to find alternative ways to make money. So they went and purchased assets with those deposits instead of turning around and lending that money. So when they purchased assets, what happens to the value of assets when inflation and interest rates are rising, much like housing prices? All those came down in value and they were not able to meet the demand for cash. That's the US banking crisis. Let's talk about inflation. Here in Canada, inflation was announced today, March 21st, down for February, 5.2%, down in January from 5.9. The trend is good. We're moving in the right direction, moving down, but we're still paying a lot for groceries, which is a measure of core inflation. So until that really comes into a range that's acceptable to the Bank of Canada, that's sort of one of the red flags right now. However, because the overall trend is coming down, I believe that they are going to leave interest rates unchanged at the next meeting in April, barring any other external events happening. So, because I don't have a crystal ball, I can't say what might or might not happen. But if this trend continues and everything else stays status quo in Canada, I expect the Bank of Canada to continue to pause, holding interest rates steady. I think that the Bank of Canada doing that the last time around in March really gave a boost of confidence to the housing market, and a lot of buyers who were on the sidelines jumped back into the market because without that raise in interest rates, housing prices started to increase over the last 3 weeks. Specifically, and we're seeing a lot more inventory coming to market as we head into the spring season. So I think that personally, I expect to see an increase in housing prices modestly over the next season, spring season, and into summer. And I expect to see interest rates stay here, perhaps into the summer and into the fall. If inflation is not falling in line, especially core inflation, we might have to see an uptick in interest rates. So if you're wondering how this affects the value of your home, your decision to buy or sell, hit me up in my emails or DM me or give me a call myself, 416-710-3512. Bye for now.